And now to the last panel, to the last roundtable of the European Blockchain Week. We will talk about DeFi, and the moderator is Lambis Dionysopoulos, researcher of FinTech, CBDCs, crypto, algorithmic governance at the University of Nicosia. Lambis, I leave the virtual and the actual stage to you, and please do announce your roundtable participants.
Thank you so much. Hello, everyone. Welcome to our panel discussion at the intersection of decentralized finance and regulation. My name is Labis. I'm a researcher at the Institute of the Future at the University of Nicosia and the European Blockchain Observatory and Forum, and I will be your moderator for this discussion. I think to say that decentralized finance is a hot topic would be an understatement. Its exponential growth over the last year has introduced radical new paradigms in finance and has, of course, invited the interest of the general public, of investors, as well as regulators. Now, the overarching challenge here is to find the balance between innovation and investor protection. And today, I'm very happy to be joined by 4 experts on decentralized finance and law. Merav, Nathan, Jan, and Magnus to discuss just that. We will attempt to do 3 things: demystify decentralized finance, discuss what has been done and what needs to be done in terms of regulation with a focus on Europe, and finally, we'll go over some emerging areas in DeFi and discuss potential policy responses. Throughout the duration of this panel, we'll be monitoring the chat for questions, and we'll try to address them either as we go or towards the end, so feel free to interact with us that way. And without any further ado, I would like to give our panelists the opportunity to introduce themselves and provide some information on their backgrounds, starting perhaps with Magnus.
Thank you, Lambis. My name is Magnus Jones. I'm the Nordic Blockchain and Innovation Lead at EY, Ernst & Young. I'm based in Norway. And we do more or less A to Z within the landscape in terms of delivering services. So we have everything from tax and legal to fraud forensic, audit, accounting, bookkeeping, and also technical implementations. So globally at EY, we have more than 300 core blockchain developers, which is spread among 14 core blockchain hubs. So we are a huge contributor to this one. And we have also had a DeFi group in place for more than 3 years in the Nordics. So we are working extensively in this topic and area, and I'm very much looking forward to discuss further with you guys.
Sure. Let's start then with, let's begin with Nathan.
Thank you so much, Lambis. Hello, everyone at home and at the event currently. I'm Nathan Vandy. I'm a UK lawyer, but EU-based, and I'm the legal counsel at Blockchain Helix, which is a digital identity company based on blockchain technology. And I also lead the Legal and Regulatory Affairs Committee at WSEO, where we support DAOs with their structuring and help them get regulatory compliant with EU regulatory law. And also I'm the co-chair at the governance working group at INATBA. So my expertise is in the intersection between law and governance in the decentralized industry. I'll keep it short and sweet.
Thank you. We will continue with Jan.
Hello, everyone, and thanks for having me today. Blockchain Republic initiative. We focus mainly on providing advisory and other help to blockchain-related projects, mainly in the CEE region. I'm also convener of the European Blockchain Services Infrastructure use case focused on so the part of the European Blockchain Partnership. And I'm very happy to join my colleagues also from INATBA, Nathan and Merav, and we are all in the sub-working group on DeFi, and I'm very happy to be a co-chair of this sub-working group as well.
Thank you very much, Jan, and we'll end
founding,
with
but hopefully that will be more about the topic than just the titles. Thank you.
Sure. Merav, please go ahead.
Yeah, so thank you for having me today, and thank you for joining everyone, whether you're at home or right there at the event. Yes, I'm also a member of INATBA. I'm on the academic advisory board, also working very closely with Jan and Nathan on everything that has to do with DeFi and DAO and all this space. In the subgroups, the different subgroups of finance subgroups and of the government at the INATBA. I'm also a global leading expert on blockchain and cryptocurrency, which was recognized by the CFA Institute, and also NPR, which is the National Public Radio in the US. I'm a fintech faculty, I'm a fintech professor at Rutgers Business School. I teach a lot of blockchain courses, cryptocurrency, in fact, about 4 courses, mainly for undergrads and graduate students, and also a collaboration in with the law school, which is more about regulation innovation. So we're talking a lot about DeFi and the regulation that relates to that. So it's very interesting. So I'm very much into the blockchain space and everything that has to do with DeFi, doing a lot of research, building some platforms that relates to that, and writing some books. And yeah, and hopefully I would like to advance this space because I'm a great believer in technology. So we'll see if we will be able to help people better understand the space today. Thank you.
Thank you very much, Mara. Now, I would like to start with a question to set the stage, and any of you, please feel free to answer. In the broadest of strokes, what is your definition for decentralized finance? And along your answer, please give us an indication as to how fast the industry is moving, the decentralized finance industry is moving.
I guess I'll kick off. So DeFi is an abbreviation of decentralized finance, and decentralized finance is an industry and a technology which leverages blockchain technology to create public and permissionless financial services and products. And that's the very general overview. These products are public in the sense that anyone, as long as they have access to an internet connection, can get these products or services. And also you don't have to have barriers to be able to access them. So typically in the traditional financial industry, there's what's known as KYC, so know your customer, where if you don't actually pass these compliance checks, you're not actually allowed to access these services or products. But in DeFi, there is none of that, which means that people that typically are in areas where there are no banks, so a lot of areas in developing countries, and actually even in a lot of areas in developed countries, are able to access financial products and services where they wouldn't be able to. So it really empowers a lot of people to be able to grow themselves financially in ways that just were not possible 2 decades ago.
Jan, do you have anything to add to that?
Well, I would stress the first part, the decentralized. It's a very important. Not every financial services based on blockchain can be deemed as DeFi. For instance, I personally wouldn't agree with saying that any banking product based on blockchain, like any guarantee based on blockchain being used just as a database, can be a DeFi. The decentralization is very much the key in my opinion. And for instance, we could see many products based just on, let's say, centralized, not just banks, but also other financial institutions. And I don't believe this shall be the DeFi in the real sense, because the decentralization brings a completely new layer, of course, a new sort or new group of problems or challenges, but also very much new opportunities. So blockchain is not, as we all know, but it's important to say that aloud, it's not just another database. We don't compete with any other mainframe or anything else. The decentralization is the key. So it's a completely new generation and evolvement of financial services without intermediaries. Yeah.
See, Magnus, anything to add to that? I saw you.
Yeah, no, I can just add to that that one of the things that I found very fascinating with the DeFi space is also that you are able to build and create your own financial type of services, such as borrowing, lending, synthetics, derivatives, etc. Services which you previously had to go to an ordinary broker to deal with. A 14-year-old person can deal with that in 15 minutes now, and that's also both fascinating but also a bit scary, sort of saying that products that the traditional financial industry has spent decades on building up can be dealt with in a way now. So I would like to stress also sort of the part that you can connect these things together is very fascinating in terms of how one can build instrument in this space that previously was not available to the general average public. And also that the mechanism of DeFi also facilitates sort of saying, one can think about it as that you are being continuously unfaithful towards your banks, i.e. you have market maker services that are continuously finding the best possible interest rates for you. And that's also new mechanisms here that you don't get in the traditional financial world, and hence why you have efficiencies and why you can get interests of 6 to 60%, while in the ordinary world we have negative interests. So that's also a very interesting element towards it that I found.
Thank you very much.
If I may add, I mean, I would like to take DeFi to the next level. And sure. Because the way I see DeFi is way above and beyond the traditional finance that we see today, the lending, borrowing, payments, etc. Even though it is called decentralized finance, but I think we can call that, you know, DeFi will allow us to get to the decentralized economy. And what I mean by that is that if you think about it, everything has to do with finance. And there are a lot of, today there's a terminology which is called embedded finance, that let's say you go to a retailer and then they're saying, okay, we can help you finance your, how to purchase, you know, even like when you go to a regular retail, if you want to go like to Amazon, for example, they ask, do you want us to finance, and they have a third party, etc. Now think about it in that term, that if everything is on the blockchain and decentralized, then all of those, whatever activity that you're going to do in the economy, whether even you buy coffee or you exercise or anything that you do, will be all integrated in the blockchain. And all this concept of embedded finance will be basically embedded economy. And your activities, your purchases, your payments, your lending and borrowing will all be from the same place, because that's what blockchain is all about. So I know it sounds a little bit futuristic, but I do see the possibilities of that happening. I mean, technology will eventually evolve towards that. And there will be, of course, demand, because, you know, even in traditional services that we have today, we kind of moving towards like that. Everything you do is like they're providing some finance aspect to it. So blockchain can facilitate that in many ways. So that's the way I.
Thank you, Mara. I mean, we talked about some of the characteristics of decentralized finance, how it is different from its traditional counterpart. I think some of the words that were thrown around were open, borderless, no KYC, lack of control perhaps. And we also, Merav also talked about this grand vision for DeFi, and this is something that I want to persist. Some view those applications, the lending, the borrowing, the blockchain derivatives, as this intermediary step towards a more accessible financial system. And I think Nathan touched upon this. Could you speak more to this grand vision behind decentralized finance? What is the end goal here, if the vision is realized?
Yeah, I would say that the vision is financial sovereignty, and it really started with Bitcoin, right? Where instead of money, as we know it, being issued by sovereign governments, it was issued by the people through technology. Like the people give this money power. It's not any trust in a government, it's a trust in society in general. And I think this new way of thinking about how we share value and how value is created is the real driver that everyone is so excited about. The fact that we now, as a people, as an international globe, can say, okay, beforehand, when we were exchanging services, we had to lend the trust of governments. Now we can lend the trust of ourselves. And this is only enabled through blockchain technology. And that is, I think, what's really, really exciting. That's the heart of it. And then, of course, all of the other products and services that will be built through with that vision is just going to bring it forward to life.
Thank you, Nathan.
Yeah, I
Please
mean,
go ahead.
I definitely agree with Nathan. I mean, I think that Nathan now is thinking in the how the combination of DAO within DeFi, which is definitely the next step, because it's all about the integration of all these applications together and all of this concept together, because people saying, okay, DeFi is, it's there's no regulations and no compliance, there's no anything. But if you think about self-governance, and that's what Nathan, I think, was referring to, and the concept of DAO, which is Decentralized Autonomous Organization, for those who not following the acronym, then there is governance. But the governance is different. So instead of, having like rules coming from above, whether it's by a central bank or by, I don't know, some kind of regulators, or which in fact, even regulators can be part of that DAO to some extent if there is a way to construct something like that. So it's not like, you kind of throwing rules out of the window just because you have decentralized finance. And that's, I think, a misconception, that people thinking, oh, if it's decentralized, oh, there's no rule, everyone can do whatever they want, party all day. But it's not really the case. I think it's even, there might be even a possibility to have even more stricter regulations than less, because if these are the community who's trying to govern and protect itself, so they have the best interest to protect their own interests. And therefore, I think in a sense, it's can be even more, you can have even more compliance and more regulation, because the community would ask for that to protect itself. So it's not less, it might be even the same, if not more, and to be even more beneficial. So if you think about it, when people think, oh, no KYC and all this and all that, it's not completely true, because the DAO itself can construct those kind of rules and protections and policies within the community, and make sure that everyone is going to act according to those rules, and if they're not, they're going to be penalized. So that's the way that I see it. Sorry.
And we'll have a lot of time to talk about regulation and self-regulation, but we're speaking of this ground transition in how finance is essentially managed, which of course comes with great risks. And we've seen a lot of this over the past couple of months. And I would like to ask Magnus and perhaps Jan to give us an overview of what kind of risks can somebody find in DeFi. Billions of euros in value have been lost to exploits, and of course, exotic finance comes with exotic forms of risk. So I'd like us to give us an overview of what's happening with that.
Sure. There's definitely lots of risks out there, and one of the main risks that I see is rather that this space moves so incredibly fast that even the ones that are in this space as developers do not follow it fully, and not even us that works on this one 24/7 has a fully update on what's going on. And that's sort of saying just a illustration of how things move here. It moves very fast. And by that, I also mean that there's a huge risk that people are actually not doing good enough due diligences on the smart code itself, what's in the code actually, and also down to what we have discussed briefly about DAOs, the decentralized autonomous organizations, and also the setups here in terms of DeFi as decentralized. Actually, how decentralized is it? Because we have seen recently examples also of protocols going into a new structure such as MakerDAO, who was the first well-known big DeFi project who became a DAO, and other ones has done the same, while suddenly they get a hostile takeover, and then it appears that this code that should be fully decentralized still can be accessed by the development teams. So hence that's a challenge from a trust perspective, as far as I see it, and one of the main challenges in the system right now, because there's de facto not enough well-developed tools that can do sort of the reviews of the smart contracts, and not enough skilled people who actually can do a good compliant overview of, is this something that you can trust or not, as is. But as you also mentioned, even though that there has been lots of hacks apparently, and as Mera also mentioned, that what we see here is sort of the self-regulation, that we should not forget that lots of the money that has been hacked has also been returned. Hence, it's not a clear line there towards that this is just something for criminals. So last week, I assisted the United Nations at a 3-day event they had on counterterrorism in Moscow. And there was also CipherTrace, a US-based clustering analytics monitoring company who was recently acquired by MasterCard. And they actually said there that I believe it's easier now to monitor a transaction from a DEX, a decentralized exchange, rather than from a physical exchange. That gives you sort of the power of the elements of transparency within this part. So it's not black and white towards the hack and the risk element either, but the landscape needs to be able to mature, in my opinion, before we can draw any conclusions sort of saying around it.
Thank you, Magnus. Any other views on that before we transition to the next topic about the risks that are prevalent in DeFi?
I just like to support what Magnus was mentioning about that. He saw that, you know, if you use DEX, you probably be able to monitor even more, which is correct, because everything is traceable and trackable on the public blockchain, unlike with centralized exchanges. So the governance and the compliance can be even enhanced if you have this decentralized application, because everything is for everyone to see. And if someone is doing something, you know, malicious, then you can find that person, that actor, pretty quickly. And that's in fact, you know, coming to, I don't know if you heard, there was kind of someone, a scam on OpenSea, but it was really amusing to hear that because that was a public blockchain, Ethereum. So of course it was traced very quickly. So it just to show you that trying to do something like being a bad actor on a public blockchain is not gonna not gonna get you far. You will be detected very quickly. So it's much easier to follow compliance, I think, even from a regulator perspective, on something like decentralized type of application.
Thank you, Marav.
Yeah.
Yeah, please.
It'll be great to just jump in there because I really agree with what the past two people have said. And typically I break it down into three sections when it comes to looking at the risks. I really look at the corporate governance risk, the IT governance risk, and then the data governance risk. And of course, with the corporate governance risk, you're looking at how you structure your corporate governance, how you structure the organization around this protocol to make sure that all the different stakeholders are looked after. And especially with decentralized governance, when the governance should be given to the people, there are issues with what we were mentioning of these admin keys, which give you a superpower over what actually is included inside the protocol. And this is where we're going to start to see a lot of regulators, when they're doing reviews of these protocols, actually asking the question of the DAO, okay, you say you have decentralized governance, but how actually is the admin keys administered inside the DAO, inside the protocol? And that leads to the IT governance, right? Because if they're able to find on a corporate level the people that hold the keys, then the governments could work alongside these individuals to granularize smart contract protocols to include more regulation. And this is what a lot of people don't want to see. And this is why a lot of people are burning their admin keys so that there's no control and it's completely governed by the people. That's true decentralization in my point of view. Once it's completely, there's no completely any admin keys. But before that, there is that risk that DeFi and the organizations around it have to understand. And lastly, on the data governance level and understanding where the data, so where the public keys are and the data that's connected to the public keys that represents, for example, Bitcoin or an NFT, this is where the strength of blockchain really comes through, where it doesn't matter if you haven't KYC'd an individual, you know that that key relates to that data. And if you can see that it relates to that data, if you can see that that public key has stolen it maliciously, then no one will interact with that public key. And this is what is really, really fascinating in the space, where it creates a self-governance aspect where people will look for bad public keys on a data level and not interact with them. So you, by acting negatively, you price yourself out of your own community.
Just maybe one quick remark. Well, I agree with the panel. However, we shall focus mainly on the reputational risk for the DeFi industry itself, meaning that right now is the time to be very careful, because the regulators are looking closely to the DeFi, and either it will fall to the traditional regulation, financial regulation, and then nothing like DAO will be possible, or the DeFi industry will prove that the DAOs are able to govern themselves and that's most important, protect the consumers or in the financial services, because we are in a heavily overregulated space. And that's something we don't want to apply on DeFi, but we have to prove ourselves that we are worth it. And maybe I just opened the next chapter focused on regulation, and but I just wanted to stress that right now it's the time to prove that self-regulation can be more, let's say, not just efficient, but even more and consumers' money than just the traditional regulation. I agree with Nathan that and Merav and of course Magnus that the KYC, for instance, on blockchain is much more efficient. However, it needs to be first explained to the regulators. Second, we need to prove it in the real life, and even one really like a bad actor can destroy this whole thing. We are right now in a very sensitive phase for DeFi, and we know there's a lot of speculation on DeFi tokens, etc., etc. So right now it's about striking the right balance to still have this industry open for the 16 years old programmer from the garage. But on the other hand, we can't afford like big losses of consumers' money in any fraud or something like that. So it's about gaining the trust and not losing it in next years. And the regulators can work in completely different way, and that's by the way a huge leap for them as well. In my opinion, financial regulators could be some kind of certification authorities for DAOs, but it's something like no regulator would agree with that, like for a bank or for financial services provider. And what we really need is to first prove that that DAOs and decentralized rules are better, and than the centralized one. Full stop.
Thank you. So this leads us very nicely to the next topic today, which is about regulation specifically. As you've hinted to, some people view regulation as this way for minimizing the risks of DeFi and legitimizing it to the eyes of the average investor and the general public, while others believe that DeFi is better off self-regulating, and it is by many regards still a dormant industry. And if it is regulated at this stage, especially by regulators that don't fully grasp DeFi, then it will be to its detriment. On that note, what is your opinion? Is this the right time to regulate decentralized finance, or should we allow some time for the industry to develop and perhaps even come up with its own mechanisms for self-regulation? And in the same breath, I would also like to ask the question of, should we approach this from a technology neutral perspective or a topic specific perspective? We talked a lot about DAOs. Should we approach it from this topic, more generally speaking? So I'm eager to hear what you have to say about that. Let's perhaps start with Nathan. Is this the right time to regulate DeFi, Nathan?
My pleasure. My pleasure. As Jan was alluding to, we are in a very nascent and young industry, right? The amount of finance which is locked into decentralized protocols in comparison to traditional is still under 95%, right? So we're not going to be taking over the world overnight. And that's not the goal either. The goal is to make sure that investors and consumers can have additional options that weren't available beforehand. And that's the whole point of human creativity, to create better and more efficient tools for us to have wealth and grow from. The question here is whether it's got to the point where the industry needs regulation, or is it actually functioning fairly well on its own? And I think one of the first facts to look at is that the amount of money which is currently laundered through DeFi is completely gianted by the amount of money that's laundered through traditional finance. So this already should act as a paracetamol or painkiller for regulators looking into the space and just open their eyes at the comparison between the two. The industry is already doing very, very well in order to make sure that this is minimized. Second, one of the main other areas is obviously looking at decentralized governance itself. So looking at some of these protocols which have financial services and how they are basing them on typical regulations that are already on an international level. So for example, if you look at Aave, which is a lending protocol based on DeFi, they based a lot of their risks in lending on the Basel I, right? So they're already aligning themselves with international financial regulations without anyone telling them to. And this is something that shows you the attitude of the industry, right? The industry has seen the potential for it to work, and talented intellectual people, legal people, technical people, business development people are coming to the space and saying, we learn all of these things whilst working in this traditional industry. Let's see how we can use this and remodel it in a way where we can give the same assurances in the traditional way in the DeFi space. And if the regulators walk hand in hand with these people, and there are associations such as INATBA that are looking to connect regulators to these decentralized governance protocols to show them that it's working in this way, and all we need is less regulation and more clarity, then we can definitely see a future where DeFi will continue to flourish, where people will be able to really access finance in a way that isn't possible before. And just to finish off, I do think that one of the best ways to do this is a sandbox approach. If you look, even the SEC Commissioner Hester, she proposed one in America where it would allow DeFi projects to be able to work for a few years in line with the regulators, making sure that their protocols and operations are in line with the best practices. And then after, gradually decentralize, because no matter what protocol you have, it always starts centralized, whether you like it or not. So I think more collaboration is needed and less regulation is needed in that sense.
If I may have just one example, and sorry for jumping in. After the euro was created in the EU, a lot of central banks had to find different roles, because the monetary policy ceased to be their primary role. So they found, for instance, they integrated capital markets overview, etc., etc. This is gonna happen with DeFi. This is gonna happen to the traditional financial regulators, because many of these, let's say, of their duties will be, I believe, fulfilled by the DAOs themselves. So they need to find different roles for them. For instance, in the sandboxing, that's I absolutely agree with Nathan. And it's not about, but I disagree with one thing. It's not about DeFi aligning with the regulation, but also with the regulation aligning with the DeFi. So it must be a process, because well, we all believe that DeFi is the future of finance. So this is the next evolutionary step without intermediaries. Maybe not all financial services will be completely decentralized, but we are witnessing, let's say, the death of intermediaries in financial services in last, I don't know, 500-600 years. So this is just a next step in this journey, and regulators need to align themselves, and they need to align basically even the Basel criteria for the DeFi, and all all the regulation. It's not. This is not about, and that's my answer to your question about technological neutrality. This is not about, let's say, being focused on one technology or on one industry, on DeFi. We don't need any DeFi law. We need to align all the financial regulation to the DeFi, to the next evolutionary stage. So this is, and Nathan is right, this is just the beginning of the long journey, and it can take like maybe 45, 50 years. But right now it's important to know that it's not just the great vision, but this is the reality. And we have seen the growth in the amount of money being locked in the DeFi tokens. This is gonna skyrocket the next year and the year after that. And industry is much bigger right now, while in 10 years I believe this will be the vice versa. And the reason will be for the consumers to use DeFi is and will be much more convenient, efficient, and simply better than the traditional financial services. And Inadba and other associations, as well as the big players, to align themselves, and the players needs to align with the regulations. So it's a long process.
If I may add, I mean, I would like to support and also add to what Jan and Nathan have just mentioned a few things. Number one is that I do believe that, the futuristic future that I just mentioned about that everything will be some way, every activity that we have in the economy will be in some respect considered as DeFi. Because the way that I see it, because everything has to do with finance, whatever we do in our economy, therefore some aspect of DeFi will be embedded there. And that will be the way that I envision it, is that eventually you would think about all these services. You don't even think and talk about it anymore, because it will be like second nature, like the way you use the internet. You don't ask what is internet, why is it working this way or that way, and we're gonna get to that point, not today, but it's a process. So that's first. Second, I do believe that it is a process for sure. And there are always going to be bad actors, like in any innovation. And unfortunately, whenever there is a new technology, a new innovation, like in the early years of internet, the bad actors come first. I don't know why, but they always come first. And they always, give you a bad reputation to all these new technologies. But eventually, they disappear, because the serious players, eventually will develop the serious application that do take care of consumer rights, that do care about regulation, that do care about compliance, like Aave, like Avalanche, like all the other Algorand and all the other ones who really are trying to build things that are in the top of the mind. They do understand all about compliance, regulation, risk, etc. So eventually, those are the players that are going to stick around, and that's, and it's not going to happen today, but, all those bad actors disappear, like what we had in the internet. So it's a process. Number three, another process that we have here is that we do need, and I do agree that whether it's in terms of a sandbox or some other way, or to collaborate, to bring the regulators to participate in this process with the industry. There's no other way to do it. You can't just, have the industry, do what they want to do, and then have the regulators over here watching the industry and saying, oh, you should do this, you should do that, and then we have to comply and not comply, and then there are all kinds of, misunderstanding and going back and forth on how to adjust this regulation, that regulation. We have to bring them to the process. Come and build with us and see how together we can build this application that makes sense to you, that are compliant with what you want us to be compliant, that are see how it can be compliant, and see how you can monitor it in a better way than you monitor today the other traditional finance and the other traditional activities. So come and work with us and help us build this in a way that makes sense to you and protect consumers, investors, everyone who's, the public, the general public, so to speak. So it is a process, and we have to bring them to the table, so to speak, in order to build this. I don't know if it's a sandbox or some other collaboration, but it has to be this way. And not to mention that, like the scandal, I mean, and we have to highlight when we talk to them, all these scandals, so to speak, scandals that happened on the blockchain, even, the ransomware was detected, through all kinds, the FBI with, of course, some algos, etc., was able to find those ransomware, those terrorists in a matter of days. And if it were cash, it would take them months, if not, I don't know, a long time, if ever. So we have to bring all of these cases to their attention and say, well, it's happening. I mean, some other, offices, with even government offices and other industries, they know that it is much easier to track those scammer and whatever is not in compliance on the blockchain rather than in traditional finance, because even in traditional finance we have scammers and people who are trying to do frauds and all kinds of things. So trying to focus that blockchain is the evil of all things, it's a little bit misleading. So we have to correct that concept and misconception. So that's what I had to add here. Sorry.
Thank you. I see that the panel is leaning very heavily towards self-regulation or perhaps a cooperative approach between regulators and DeFi. On that note, I would like to speak about the current situation and how much different it is from this vision that you're just describing. Specifically, what is the situation in Europe with DeFi regulation, and in what ways does the markets in crypto assets regulation affect DeFi, and how could this be done better? I mean, you mentioned some ideas, but in the context of MiCA, how can it be improved? And let's perhaps start with Magnus.
Yes, thank you, Lambis. And just to sort of take the red thread from what has been said here from all the other panelists, and that's down to, I think it's important here to understand that the DeFi space is definitely not something that is fully developed. It's not something that is written in stone. There will be something coming after DeFi as well. And we have seen this previously in history. You can just rewind to 2018 when we had a proposed regulation for specifically ICOs, which was not then implemented. But if it had been implemented, it would have not covered DeFi, for example. It's just one example that whether or not it should be a specific law or a technology neutral law, I think we all agree and understand that this is definitely not the time for regulators to go in and specifically regulate it, but it's the time for regulators to go in and understand it. Like, for example, Norwegian tax authorities, to whom we have worked with pro bono for a long time on this area, they issued guidance this year for the annual tax return on how to tax your DeFi protocols. Not an extensive fully overview, but they say, hey, we need to look into this now, because if we're looking into this in a year, 2 year, 3 year, it will be very much more complex to look into it. So they have actually understood they have to do something now and not just sit still. And I think that's sort of what's leading up to your question on the MiCA here. And that, I believe, lots of governments de facto is sitting still, waiting for the MiCA to come in place and sort of saying, hey, can't you guys just take care of this for us, because it's too complex for us? Because de facto, and that's not a criticism, but that's just a fact, What we're trying to regulate today initially with the first proposal of MiCA is the 2017 markets. And then we have had some revised version which is taken into consideration that on the first draft, for example, it was said that if you are to issue a token, it has to be a legal entity, etc. That's kind of difficult if you are to do it in a decentralized way, while the amended version of the MiCA is taking care of sort of the innovation part of the MiCA. And I think that important element towards this is also that we should take into consideration that MiCA is just a small piece of the whole financial package framework that the EU has released. It's just a piece of the puzzle. So we have to see all things connected here. So I personally would not sit still and wait and lean back and say, hey, MiCA is going to fix this, because the landscape is developing so fast. So I rather encouraged governments to actually look into it and try to understand it. But that's a challenge, because right now they are struggling enough to understand the ordinary buy, hold, sell crypto market. So as mentioned, it's not an easy task. So I also personally believe that sandbox solutions can be good, but then also all the governments needs to actually understand it, and to be able to understand what you are to make a sandbox for, you have to get your hands dirty, sort of saying, and dig into this one and actually work and cooperate together with the market. Like, for example, like Norwegian tax authorities has done, they invited all parties in, we sit together with them, we discuss it together with the clients, and then we discover things like, for example, Aave and Compound, which is two lending protocols which could appear pretty similar. They have a different method of calculating interest, for example. That's two different ways of how to calculate the tax. One cannot just say DeFi tax it in this way. It's token specific. So I think we should go back to sort of saying and understand that this is all about one and zeros. It's all about a technology, and you have to rip sort of the token element apart, find the attributes, and when you have the attributes of the token, then it's easy to find the right way to either tax it, treat it in a legal way, or whatever, because we have also lots of current rules in place today, which is applicable as long as you understand what they are to be applied to. And that's sort of the challenge as far as I see it here, that one has to understand more about the token element, because as mentioned, I personally believe we will see industry that also will move over to more like how it is today. It's de facto very difficult for me, you, the grandpa, and the taxi driver to buy DeFi products, right? It's not easy to have a MetaMask and remember 12 words in a different order, etc. So I believe personally that what we will see evolving in this landscape, and this is something that we are working on today with exchanges. Right now, we are assisting a Norwegian crypto exchange on obtaining an ordinary banking license, because they want to become a fully crypto bank. So you can just imagine sort of the more user-friendly interface that they can offer. Say, well, you want to buy Bitcoin, for example, host us. Well, then we can also offer you an interest of 6%, for example, if you lend that Bitcoin back to us, so we can use it as liquidity in our market and use DeFi protocols. But then these players will have the insurance in place. They will have the safe haven in the same way as when you are to buy a derivative in the ordinary world today, you go to a licensed broker. I personally believe that we will see a move in that direction, that also ironically, to get to sort of the decentralized place, we need to have centralized intermediaries to move there fully. We will not go from fully fiat system to a fully decentralized world.
Well, and let me just, I absolutely agree. And let me point out one single piece of legislation from the whole package, and that's not MiCA. That's the little sister. It's the pilot regime proposal. And living in the shadow of the big brother, this is the boldest step of the European Union in years, because the pilot regime de facto means that it's an ongoing sandbox. It's the first time any piece of legislation is saying, okay, you don't need any centralized license for a regulated market. It's a huge milestone, or it will be after it will be adopted. But this is a huge that's the quantum leap in their minds, in the minds of the regulators. And unfortunately, or fortunately, I don't know, everyone is talking. The pilot regime is living its life, and I believe it will prosper and will flourish, and we will have many so-called multi-trading facilities based on blockchain without any single centralized licenses in 2-3 years. This will be a huge thing, and I absolutely agree with Magnus. But I would also point out other let's say indirect and other indirect impacts. For instance, if in many EU countries, if we let's say adopt the crypto assets, the cryptocurrencies definitions, this will change a lot of laws, a lot of regulations indirectly. So if you believe that there will be no, for instance, no impact on Bitcoin and cryptocurrencies from MiCA, oh, there will be. There will be, and the regulators will need to completely change their mindsets. For instance, for any regulators, financial regulators and central banks, Bitcoin is basically nothing right now. They don't want to even look at it. But after the MiCA will be adopted and the whole package, they will have to. So they will probably apply other laws and other regulations. For instance, for payment services, they will need to apply it on Bitcoin and other cryptocurrencies. The whole, let's say, not just DeFi industry, but crypto asset industry will be regulated. And right now is the time. We have like a year and a half or 2 years to start this alignment we all talked about. So if I should say just one thing on this panel, just please read the whole package if you live in the EU, and especially if you are a lawyer or if you work in the DeFi industry, just read through that. And even the boring parts, as the this changing of directives, that's the boring part, but very important one, especially if you work in the capital markets area. So just please read the whole package. MiCA is a great piece of work, but in my opinion, the pilot regime is the most important single piece of regulation EU ever prepared and ever proposed.
Yeah, thank you very much. With that, sorry, I received a notification. We have just one more minute in the panel, so I just want to hear your concluding thoughts for a few seconds each. Let's start with Merab.
Yeah, I mean, I would like to add here that one thing that is concerning about MiCA and other regulators is try to put like one size fits all, and there's no one size fits all. And this is something that we have to understand, that it's use case by use case. There are many use cases of DeFi, and there won't be one type of regulation that has to fit. And there are many ways to use whether cryptocurrency and tokenization, and whether it's DeFi services or DAO or anything like that. And that's a little bit concerning to me at the moment, that they're trying to find like one umbrella of one size fits all. And that's concerning. And this is why it is important to bring them to the process of understanding what we are trying to build here in the industry and why they are not similar, and what are the intricacies and what are the changes. And in this case, you have to do like the beautiful examples that Magnus just mentioned. We have two DeFi providers, Compound and Aave, and they have different way to calculate interest, so the taxation is going to be different. So, and this is how we have to think about it. There's no one way to do things. There are many ways to do things, and therefore we have the regulators to understand how to approach it in a more flexible way to allow for this innovation to prosper and really do the best thing and find the best possible solution that will benefit the economy and society and globalization or whatever you want to call it.
Thank you, Merav. Few concluding words from Magnus and Nathan.
Yeah, no, I would say that governments, regulators should definitely, as I briefly mentioned, also not lean back and wait for a fixed solution, because there will be no such thing as a fixed solution into this industry. I would rather encourage all regulators, governments, etc., to get their hands dirty, talk to the industry, cooperate with them, understand this one better, and in that way, also in the same way as, you know, we have IFRS guidance, sort of saying, globally from an accounting point of view, but still we have local bookkeeping acts, etc. So in the same way, I think all jurisdictions should focus on themselves, like Norway has done. They're saying, well, we might have to change this one. This is our opinion, but at least this is how we want to do it in our jurisdiction. And then also talk to other governments, and also that governments actually are granted on a budget level, at least some persons, some resources who can look into it to understand the market. That's the main challenge here, that the regulators and governments don't have the knowledge. So I would enhance more cooperation, collaboration together with the industry. And yeah, I think I'll pass it there, cautious of time, further to Nathan.
Thank you, Magnus. Nathan?
Yeah, exactly. I'll just jump off what Magnus and actually everyone's been saying, right? It's all about collaboration. And at the end of the day, that is what blockchain is at its heart, right? If the miners don't collaborate together, then the protocol will not work. And this is a chance for us to utilize the spirit of blockchain with the experts and developers in the area to work with the legislators. And we're already seeing that going in that direction. Elizabeth Warren, for example, is now currently speaking to MakerDAO about decentralized governance. And these types of interactions really show that with progressive collaborative reach out from the industry and from the policymakers and regulators, we can start to create that clarity, which is necessary for this to thrive, and for the amazing economic and social impacts of the technology to move forward. I'll keep it high level for now.
Thank you, everyone. Thank you, Magnus. Thank you, Nathan. Thank you, Merav. Thank you, Jan. Thank you to the ones that are watching. And that was all from our panel.